Hey everybody, what's up? It is Monday, September 14th. I just sent out the new edition of MMT Trader. If you want to copy that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Remember, I'm the only one who has an applied approach to MMT. I take the concepts and understandings of MMT and I use them to trade and invest in the market. So, we had an update today in the market. Actually, Friday started with an update in the Dow Jones. The other three market averages were up today as well. Now, I think this is just, we're in a consolidation holding pattern right here. Now, I just put up a graphic on my Twitter account. If you go to my Twitter account, Twitter/Mike Norman, you can see that graphic. By the way, if you don't follow me on Twitter, please do, all right? Twitter.com/Mike Norman. Now this is a chart coming off the data today from the daily treasury statement, and back in July I was talking about a fiscal cliff. This graphic today is corporation income taxes. Now I've been talking about that for the last couple of weeks. Corporation income taxes, and I've been telling you how they have been slowing down relative to last year. On Friday, they went negative year over year, and the new data today, which is actually from Friday's data, they just plunged off a cliff. You really should go see this graphic. So, my reading of this is a slowdown in sales and profits. Why would corporation income taxes be falling now relative to last year unless we are seeing a renewed slowdown in the economy? Now, I may have this wrong. I may have the interpretation wrong. Maybe it has something to do with the payroll tax suspension. I don't think so, because payroll taxes are not corporation income. So I'm going with this interpretation. I'm going with this understanding. We'll see what happens in the data as it starts to roll out. Remember, the data we're getting now is still August data. Some of it's even July data, but we're getting the August data now, and the slowdown in these corporation income tax flows didn't start until this month in September. So we may not see this in the official data releases for another few weeks at the earliest, but it is pretty striking. So you should go check that out at twitter.com/Mike Norman. And again, if you don't follow me on Twitter, please do. Other than that, we saw a little bit of a pullback in the dollar. Now a lot of these markets are in a trading range kind of holding pattern right now. Gold, the same thing, been trading in a holding pattern. What I saw in the CFTC's Commitment of Traders report that came out on Friday, gold producers were sellers again. So that's, I think, the second or third week that they, minor selling, but nonetheless, we have seen them pick up their selling in this price level, all right? Oil producers and swap dealers were buyers again on the dip. I think at some point in here we see a bottom in oil, but again, I think oil is following what is happening to equities, and if we get a sell-off in equities, then I could still see particularly speculators liquidating long positions, but that's been happening. We had some big liquidation by futures funds in the oil markets. So yeah, things are in a holding pattern. We have three central banks meeting this week. The most important, of course, is the Fed. They will conclude their meeting on Wednesday. No rate adjustment or rate cuts are expected. Powell's been talking about how he's going to try to boost inflation. The problem is he's doing it all wrong. When you keep rates low or at zero, you're not going to get any inflation. And the perfect example of this is the Bank of Japan, which has been doing it for over a decade, and they're like scratching their heads saying, hey, we can't generate any inflation. Well, no kidding. When you keep rates at zero, that's essentially an across-the-board price reduction in the economy. I've said this so many times that the cost of all goods and services reflect the cost of credit. If you keep the cost of credit very low, it keeps the cost of goods and services very low. It is not inflationary. If central banks want to raise inflation, they have to raise the price level, and they do that by raising interest rates, not cutting interest rates. So the Fed, to me, looks like it is about to absolutely fall into the Bank of Japan trap, what I'm calling the Bank of Japan trap, which is keeping rates low or at zero, believing that the longer they keep it there, the greater the chance they're going to boost inflation, when in actuality, the opposite is going to happen. So they're just going to keep it at zero forever. Now, we have one force that is working opposite to that, or I should say a force that is driving price trends higher, and that is the fiscal side. All right, so we do have the fiscal side, but the Fed's monetary policy is slowing down the price pressures that are being created by, right now, unprecedented fiscal expansion. So it's an interesting dynamic going on. You got to have a lot of patience if you're doing the inflation trade, the commodity trade, which is the side I'm on. If you're doing the weak dollar trade, which is the side I'm on, you know, you got these two opposing forces. You got monetary policy that's keeping inflation very low. You got fiscal policy, unprecedented fiscal expansion that is working to boost prices, weaken the currency, etc. So yeah, that's it for today. I got the new edition, a new issue of MMT Trader is out. Go to my website, pitbulleconomics.com, and check it out. See everybody tomorrow. Bye-bye.